We will just go ahead and get started. My name is Kristen Eggleston. I'm the Executive Officer at CRBRA. So thanks for joining us for our first working lunch. We are so happy to have Teal, Becker, and Chiaramonte, CPAs. We have Greg Galla, Leah Henderson, and Gretchen. I'm gonna just mess up your last name. So
Gunther.
So they are here to give us a tax update and to talk about ERC and PPP. So I will just turn it over to them to get started.
Hi guys, I'm Greg Galla. Been on the board with CRBRA for quite a few years. Kristen was talking about these lunch and learns, and I thought it would be a great idea for us to kind of help out and throw out some tax things that have been going on. We're going to start out with an update that we'll just go over some general tax updates, and then we'll talk about the PPP program and the ERC program, which is the Employee Retention Credit Program. Leah and Gretchen are both in our tax department. They have several years of experience and also have done a majority of the research. So they're a great resource. So if you do have any questions, I would encourage you to reach out to them because they can be very helpful and have a lot of knowledge with this stuff. So I'll start with the tax updates. I guess we're going to try to have you hold your questions to the end so that we can get through it, because there's a ton of information we're trying to get through today. But if you do have an urgent question, I guess if you could put it through the chat box, Kristen can let us know that they're coming in. Okay. So on the tax updates, the first one we want to talk about was the energy efficient home credit. This actually got reinstated in 2019, but we thought it important for people to know because it does run out in 2021, and you do have time to amend and go back if your homes were certified. So there was a credit available for $1,000 to $2,000 depending on how efficient the homes were, and if you got the certification from their certifiers in the area, you could apply for these credits. We did it on many builders last year and had to amend 18, and then we're able to include it in 19. The one thing, one of the things that we should mention is that the credit, when you apply for it, you have to reduce the cost of constructions by the amount of the credit. So if you get 10,000 in credits, you're going to reduce your cost of goods sold by $10,000. Again, it's only available right now through December 21. The next thing, we just want to mention this is 163J is an interest limitation. And what they did was they had updated the law so that if you wanted to opt out, you can use ADS, which is a different type of depreciation. They changed it from 40 to 30 years. So it's a little more beneficial. So it's something to consider. If you are subject to the 163J, which many home builders and remodelers may not be, but we do see it with people that own rental buildings. We think it's important to discuss with your CPA whether you should be opting in or out. Another big thing that came up this year was that in 21 and 22, they're going to actually let you deduct 100% of your meals. Previously, it was 50%. I know that's always been a topic that people have asked me about, so we thought we should mention that. Entertainment is still not deductible. Just these came from the CARES Act, so the employer payroll tax deferral, the 50% of taxes that you deferred, this is for FICA, that will be due. The first half is due December 31st, 2021. The remaining is due December 31st, 2022. And then we just wanted to mention that the IRS made a lot of changes to your K-1s, which if you own a partnership or an S-Corp, K-1s are basically your ownership income information and actually now basis information. So don't be surprised if your accountants are starting to ask you for more information, because there's a lot more information required to put on these returns. And we think that unfortunately, it takes a lot more time to fill these out, and the IRS is requesting this information so that they can track whether you should be taking income or losses, or really losses from your business. So don't be surprised if you're getting more questions on that.
Okay, so I'm gonna get into the PPP update at this point. We're gonna assume that everyone kind of has a basic understanding of PPP. There's a lot of information in our slides that we won't go into detail on everything. Some of it's kind of rehashing the rules that have existed since the CARES Act. And then we'll go through some of the newer rules. Just a kind of timeline of PPP. It first was passed in the CARES Act back in March. The funding ran out in about a week of it being open. So they did put more funding in that was available through August. And that never got fully used up. They then in late December came out with the Economic Aid Act, which put in some new funding to PPP, created 2 new rounds of funding basically, and then changed some of the rules retroactively and going forward. So we're going to try to touch on basically all the new stuff that came out of this Economic Aid Act. Now my slides are stuck. Okay, so like I said, the Economic Aid Act put out a new round of PPP funding. So there's going to be first draw loans and second draw loans now. So a first draw loan is for someone who didn't take PPP in 2020. And then second draw is someone who took out, sorry, Greg, did you have? A second draw is for someone who did take out funding in 2020 and then they meet the more restrictive requirements to get additional funding in 2021. These loans are authorized through the end of March, subject to availability. So if the funding runs out, there's no guarantee that they'll replenish the funds. So if you do qualify for these loans, you think you're interested in taking advantage of these programs, just be aware that, the funding could run out before this March 31st date. So just a reminder on what PPP is. So basically, the loans are 100% guaranteed by the SBA. You don't have to make any personal guarantees or pledge any collateral. The proceeds have to be spent during the covered period, which we'll talk about today. And you have to spend the funds on qualified expenses. If you follow all the rules of the program and you meet, the requirements and the limits, you'll be eligible for potentially full forgiveness, which makes the loan into more of a grant. Anything that's not forgiven will have a 5-year term at 1% interest. So at a bare minimum, it's a low interest rate loan. A couple things on eligibility. You had to be in business as of February 15th, 20 to qualify. And you also can't, or you have to certify that you have current economic uncertainty. So we just want you guys to be aware of this. When you apply for the loan, you are signing off saying that you have current economic uncertainty that requires you to take out the loan. So just be aware if you're, concerned about whether you meet that requirement, I would discuss it with your CPA or your banker. So the first draw loans are, again, for the people who didn't receive funding in 2020. The rules are generally the same as the 2020 PPP rules. So to qualify, you have to be a small business concern. That's generally under 500 employees. It does depend on your industry. The SBA has different definitions based on industry, but general rule is 500 employees. And then independent contractors, self-employed, certain tax exempt organizations all qualify, but you cannot be permanently closed or in bankruptcy. So that's something they did clarify in the Economic Aid Act. So if the business is in bankruptcy or an owner is in bankruptcy, you won't qualify. The max loan amount for the first round is still 10 million, the same as 2020, and it's based on 2.5 months of average monthly payroll. So in contrast, second draw loans are more restrictive. You have to meet additional eligibility requirements. And the loan amount is also lower. So the max loan for a second draw is 2 million. And based on 2.5 months of average monthly payroll, unless you're in basically like a accommodation, hospitality, restaurant business, your loan will be based on 3.5 months of average monthly payroll. So the eligibility differences for second draw loans, you had to receive a PPP loan in 2020. And by the time you get the funds of the second loan, you have to have fully spent the first loan on eligible expenses. So that does not mean that you have to get full forgiveness before you get the second draw loan. You just have to spend the full first loan on eligible expenses before you get your second loan. Instead of 500 employees, it's now reduced to 300 or fewer for a second draw loan. And the big thing that everyone's talking about, to get this second draw loan, you have to have a quarter-over-quarter decline in gross receipts of at least 25% in 2020 versus 2019. So in any quarter of 20 versus that same quarter in 19, your receipts had to have dropped by at least 25%. So most people we're seeing are obviously qualifying based on second quarter of 2020. Again, independent contractors, self-employed, and tax-exempt organizations can qualify, and you cannot be permanently closed or in bankruptcy. So just a little more on the 25% decline in gross receipts. You don't have to include in 2020 receipts the amount of your first PPP loan that you received in 2020. You have to use calendar quarters. So we've had clients ask if they can use any 3-month period in 20 versus that same 3 months in 19. The SBA did come out and say that you have to use calendar quarters. If you were in business for all of 19 and all of 20, you can use annual gross receipts if that is a 25% decline, just for simplicity. And the receipts that you're using are calculated using the accounting method you use on your tax return. So this is a really important point. We've had a number of clients that could qualify using, maybe the accrual basis that their financial statement is on, but wouldn't qualify, their tax returns on cash basis. So that's just something to be aware of when you're trying to figure out if you meet this decline. And the banks are requesting tax returns, quarterly financials, or bank statements to show a proof of your decline, especially if your loan's over 150,000, you have to provide that with your application. If your loan is under 150, then you have to provide that proof by the time that you apply for your forgiveness. So you have a little more time to get that together. So just in terms of calculating the loan for your first draw or your second draw, you can choose to use 2019 or 2020 payroll. So a lot of people are choosing to use 19 because payroll might have been higher, business was shut down for a lot of 2020. We still have the $100,000 annualized cap that existed last year. And everything kind of, as far as calculating, is pretty similar to the first round of PPP. One thing that they did update is that the payroll will include group life, disability, vision, and dental insurance. So make sure to include that because, that can help you get a little bit extra money, at least, if you're going to go for one of these loans. And they did also change under the Economic Aid Act. For a seasonal employer, you can use any 12-week period between February 15th of 19 and February 15th of 20. It used to be a much smaller window. So this might help some seasonal employers out with really getting as much as possible. So one thing that changed under the Economic Aid Act that will have a pretty big impact, under the CARES Act, the covered period was going to be 8 weeks. And then they came out with the PPP Flexibility Act mid-year that said you could use 8 or 24 weeks. So now under the Economic Aid Act, you can use any period between 8 and 24 weeks. So you can choose whatever day you want. The covered period starts the day you get the money, and you choose any day between 8 and 24 weeks to end your covered period. So that will allow for a lot of planning related to, your FTE counts, the interaction between the retention credit that Gretchen's going to talk about. So this gives a lot of flexibility and will let you plan a little better. This is for any loan that hadn't applied for forgiveness before the Economic Aid Act came out. So even if you had a 2020 loan, you can still use this flexible covered period if you haven't applied for forgiveness yet. So the whole point of the PPP is that you have a covered period that you have to spend the proceeds on qualified expenses during that period. So generally it's the same as last time, payroll, mortgage, rent, and utilities, but they did add 4 new categories. And again, these apply to all loans that hadn't received forgiveness as of the Economic Aid Act. So if you didn't have forgiveness yet on your 2020 loan, you can also use these categories when calculating your forgiveness. So we're not going to go through the old costs because nothing has changed really. One thing to note on payroll, you can now take the employee retention credit even if you took a PPP loan, but you can't double dip. So if you're using a wage to claim the retention credit, you can't use that same wage for PPP forgiveness. And Gretchen will talk more about that. So these new categories of expenses, covered operations costs are basically the costs of software to help you run your day-to-day business and operations. So HR, accounting, payroll, inventory, any of the software you're using to do all of that will be a covered operations expense. Covered property damage is if you had any damage or vandalism from the 2020 public disturbances that wasn't reimbursed by insurance. Covered supplier costs will be applicable for a lot of home builders. So if you're paying a supplier for goods that are essential to your operations and that was pursuant to a contract that was in effect before the covered period, those costs will be eligible for forgiveness. If it's a perishable good that you're buying, the contract just had to exist anytime before or during the covered period. And then covered worker protection costs are all of those costs that companies have incurred to stay compliant with CDC, OSHA, Department of Health guidelines for social distancing and sanitation. So providing PPE, putting in drive-through systems, expanding your space so that people can distance, any physical barriers, all of that stuff will qualify. And these 4 new buckets of costs are obviously all non-payroll costs. So that's important because as before, 60% of your forgiven amount must be spent on payroll. So same as the first round, you should predominantly be spending the money on payroll. You want to hit that 60% so that you can get full forgiveness. Forgiveness will also be subject to reductions if you have a drop in FTEs or a drop in salaries and wages in excess of 25%. So that's the same as last time. We still have those safe harbors. You know, if you're able to restore your FTEs and salaries, or if you were shut down due to COVID. One big change for forgiveness, if you did take out one of those EIDL grants from the CARES Act, it was a grant of up to $10,000. That was going to reduce your forgiven amount, and that's no longer going to be the case. So even if you already received forgiveness on your first loan, your bank should be issuing that $10,000 grant back to you. So definitely check in with your bank if you had already received forgiveness on your first loan. So one of the biggest changes coming out of the Economic Aid Act is that they did confirm that PPP proceeds are non-taxable, and the expenses that you pay with those proceeds will be tax deductible. So we kind of went back and forth on that throughout 2020, and they did finally say you'd get to deduct those expenses on your return. This is going to apply retroactively, so all of the old loans and then all of the new loans going forward. And New York just came out, I think last week, and said that they're going to conform and you'll be able to deduct those expenses for New York as well. Like I mentioned before, you can now take the employee retention credit, even if you received a PPP loan, and Gretchen will talk more about that. And if your loan is under $150,000, there's a streamlined forgiveness application. It'll be a one-page form, but you technically still have all of the same requirements to get full forgiveness. So it's not necessarily going to save you a ton of work because you still need to calculate the forgiveness, but it will be a more simple form. One thing we just wanted to mention, so if you received a first round loan and some of the rules that have changed would have given you the opportunity to take a bigger loan the first time around, you can actually request an increase to that first loan if you haven't received forgiveness yet. So that would be if you're a partnership and you didn't include self-employment income for your partners when you took out the loan, you could ask that they increase your loan to take that into account. So there's a couple of reasons you might want to do that. It might not be advisable to do that if you're planning to take a second draw loan, because you do, like I said before, you have to spend all of your first loan proceeds before you get the second loan. And that you have to spend the increase as well as the original loan. So just be aware of that. All right, so Gretchen is going to take over on the credit. Gretchen, you're on mute.
Sorry. I know that was very fast, but we wanted to get, we want to get the maximum amount of information available out to everyone. So the employee retention credit was created in the CARES Act back in March, but a big provision was that you couldn't take the employee retention credit if you took PPP funds. Leah, can you go to the next slide? So not many people took advantage of it because most people took PPP funds. So now retroactively in the Economic Aid Act, you can also get the employee retention credit and the PPP funds. What does that mean? It means we've got to go back and look at payroll. We also have the employee retention credit is available in 2021 going forward. And there's different rules between 2020 and 2021. So let's start with 2020. So the credit itself, you were eligible if you were either fully or partially suspended by government order in during COVID, or you had a 50% decline in receipts. You are then eligible for the credit. So most places we're seeing are eligible in the second quarter. If you're going with the fully or partially suspended, you're only eligible for the wages you paid during that period. So if you paid wages during that period, those are eligible. But the minute you were able to reopen, then they're not eligible. Versus if you hit the 50% decline in gross receipts, you were eligible for the entire quarter, regardless of whether you were open or closed. You continue to stay eligible under the 50% rule until the quarter after you hit 80% quarter over quarter when you're comparing to 2019. So if in quarter 2 you had a 55% decline in gross receipts, and then in quarter 3 you only had a 15% decline in gross receipts, quarter 3 will still be eligible, and you're just not eligible for quarter 4. Qualified wages for this are wages paid up to $10,000 per employee for the whole year of 2020, and the credit is a 50% credit on those wages. So it's wages plus health insurance. So you have 10 employees, you pay them $10,000 each, you get a $5,000 credit for each employee that you have. If you have under 100 employees, it's a credit available, whether they're working or not. If you have over 100 employees, then the credit is only available to those employees you paid to not work. So that's a big distinction. And at 50% of qualified wages, and the wages must be incurred between March 13th and December 31st. And you claim the credit on your payroll reports. So in order to do this, we'll have to go back and amend the second quarter, third quarter, and fourth quarter 941s. Now, the dates are important because you can't use PPP funds, and you can't use wages on both the PPP funds and the employee retention credit. So we have to bifurcate them out. So in preparing your PPP forgiveness, you're going to want to maximize your 40% non-payroll costs, so that, and only provide 60% of the payroll costs, so that it frees up wages eligible for the employee retention credit. Additionally, the PPP program didn't really get off and running until mid to late April. Applicants started getting their deposits. So you already have a time period from March 13th to your start of your covered period for PPP that automatically is eligible for the employee retention credit if you met the previous requirements. This changes for 2021. 2021, you are eligible if your business is still fully or partially suspended due to government order, or you had at least a 20% decline in gross receipts versus 2019. So now we're talking 2021 versus 2019, and the decline is only 20%. If you end up meeting either of these requirements and you have under 500 employees, you get a 70% credit on the first $10,000 of wages and health insurance paid per quarter. So this one's a big deal because it's per quarter. It's available for just the first and second quarter. So let's just say you have one employee, you pay them $10,000 a quarter, and you get a 70% credit. You get $7,000 for the first quarter and $7,000 for the second quarter. If you have over 500 employees, then you're only paying it to those employees who are not working. Again, it's claimed on your quarterly payroll reports. And then there is one, since we don't know right now for quarter one whether you're going to meet those gross receipt tests, you are allowed to go back and compare your fourth quarter 2020 to your fourth quarter of 2019. If you meet the 20% decline or 80% of gross receipts, you're automatically eligible for this credit in the first quarter of 2021. How to take advantage of it: if you already know that you're eligible, you can stop paying in your payroll taxes, and you can also ask for an advance based off of your average monthly payroll calculated for what they think your credit will be, and then you'll have to reconcile that at the end for what you actually earned and get either an additional refund or pay it back. So that was really, really, really fast, but we know we have a time limit here, and we wanted to leave some time for questions, hoping that some of you would have some for us.
Thank you, Gretchen. Yeah. So if you have a question, you can use the raise hand icon. You can wave at me if you're sharing your video. You can send me a message in chat and I can unmute you. So just let us know if you have questions. And in case anyone is wondering, we did record this, so I can send it out to you. And we also have the PowerPoint slides that we can share. So if that was going to be anyone's question, preempted you. I see Christine nodding.
I can mention that we've gotten a lot of questions from clients about the interplay between the PPP program and the employee retention credit. We are still waiting on the IRS to give us some guidance as to which program takes precedence on payroll. Do you do the employee retention credit first or the PPP program first? And you know, we're waiting on that. And would recommend that if you have not applied for forgiveness and you are not within your, even coming close to your 10-month requirement for forgiveness, that you wait if you think you're eligible for the employee retention credit, so that you can properly figure out which payroll goes where and maximize both programs.
Everybody's too shy to ask their questions.
It's all right.
Well, I know Greg said at the beginning, if you had questions that you wanted to ask offline, you're open to that, right, Greg?
Yeah. Can you hear me?
Yes.
Yeah, you can email, I think there's our information. So any one of us will be happy to help you out.
Awesome.
Okay.
All right. I guess nobody has questions for us at this point. So thank you guys for presenting. That was a lot of really good information in a very short period of time, but thanks for making it easy to understand. So thanks to those of you who attended. This is something we're going to try to do once a month with different presenters. So stay tuned for more information about that. So thanks, everybody. Thanks, Greg, Leah, Gretchen, and have a great weekend.
Thank you.
Thank you.
Thank
Bye.
you.